Hi guys, Dan and Kai here again from Crescent Mortgages. Given the current climate at time of filming, the UK market is chaos, which is having a big impact on mortgages. We wanted to just come to you with a quick mortgage update, a mortgage market update on where things stand, how kind of roughly interest rates look, where they might be going, and how they might be impacting you. So without further ado, let's jump into it. We've been talking about how to structure this video because there's just so much going on, and obviously your personal circumstances, whether you're looking to buy a house, remortgage, or something else, potentially deciding whether you want to sell up, you're looking to invest, will dictate the finer details of how the current kind of mortgage market impacts you. But I guess we just want to give you just a quick insight from mortgage brokers that are working in this industry and market every day, kind of how things look and maybe how drastically they've changed in the last year. So I guess just the first kind of the key figures. Since last year, the Bank of England base rate has increased from 0.1%, extremely low, up to where it currently is at time of filming, which is 2.25%. So quite a big jump in a year, but not as significant as how much mortgage rates have increased. So mortgage rates will loosely correlate with the Bank of England base rate. If the base rate goes up, generally rates will go up and vice versa, but there's not a perfect match, there's not a perfect correlation. The example of mortgage rates, last year, the best fixed rates were, what do you think they were about?
Well, there was a couple at 0.99.
Yeah, and
so
1%,
1% were the best rates.
The early 1%. So if you had a good loan to value, potentially for a 2-year fix, which at the time, 2-year fixes were lower than 5-year fixed rates. You paid a bit more for that long-term stability of the 5-year. Around 1% for the best fixed deals last year. And bear in mind, this is changing on a, potentially an hourly or daily basis. So when you watch this, things may have changed again. But just to show you where we are as of the 6th of October today, 2022, the best 5-year fixes on the market at the moment are around 4.5%. Is that right? This is market leading, give or take?
There's a couple at that rate, not many. But
and if you don't get the best rate, so they're very quickly up above 5%. The best 2-year fixed rates are 5.5% to 6%. So you can see how significantly they've increased in the last year, since last year. And the biggest jump that we saw was a week or so ago following the government's mini budget. There were obviously concerns about their plans and some of the plans that they put forward. Rates had already increased. We saw further jumps in mortgage rates. What a lot of lenders did, which was the first time I think we've seen this potentially in the time that we've been in the industry, was
just lenders withdrawing altogether. Lenders just saying, we don't know where we stand. We're not very confident. We're worried about lending at too low a rate. Let's just get out. So some of them for a few days, some of them for longer, just stop lending and wait to see where they should be pricing their mortgages at.
And that is unprecedented, isn't it?
And that's going back to 2007, 2000, that sort of time. That's not happened since then. Lenders are coming back now, which is a good start. But they are coming back quite high.
Yeah.
As Dan mentioned a minute ago with the rates, a lot of them are between 5 and 6 and sometimes higher.
The fact that they withdrew rates altogether, as Kai touched on, suggests that they don't know what's going to happen to the market and interest rates over the coming months and years. So they didn't want to start committing to fixed rates that perhaps were too low or even too high. So they had no choice but just to withdraw from the market altogether. Many of you would have seen in the news that the amount of mortgage rates that had been withdrawn. Now they're starting to come back in, like Kai touched on. They are very high. Again, 2-year fixes at close to 6%, some of them well above 6%, which is just a huge jump compared to last year. There's a theory that they've all come in quite high to protect themselves, and possibly they might start to look to reduce rates, but fixed rates, but there's absolutely no guarantee of it. It could be that actually they stay roughly where they are now, or as the Bank of England base rate continues to increase, which it looks like it certainly will, these fixed rates could continue to rise. We'll hold our hands up. We have no idea what's going to happen. Economists don't know. The forecasts are changing kind of on a daily and weekly basis, depending on the movements with the government and the Bank of England. So really, really, really hard to predict. But that's kind of how things sit as we are now. The other thing just to highlight, I guess, is the difference between 2 and 5-year fixes.
Yeah, at the moment, 2-year fixes are more expensive, which isn't normally the case. You'd normally pay a premium for a 5-year fix.
At least for the recent history where rates have been low.
Yeah, for the last probably decade or so. You pay a premium for a 5-year fixed rate. You'd pay 0.5%, maybe 1% higher, and you would get stability and security for longer. That was the trade-off. Now it's flipped the other way around, isn't it? Now a 5-year fixed rate is cheaper, which would indicate they're expecting rates to come down through those 5 years.
Or at least some people theorise that that might be the case.
Again, that's a theory, isn't it?
Theorise?
Yeah, theorise, yes. And the 2-year deals are higher, and they are higher because the uncertainty is particularly intense in the next year, 2 years. In that time frame is when most of this is expected. You know, again, theories are that it will go up and peak at some point, possibly in 2023, maybe in 2024, and then start to come down. Maybe that's a theory today. That could be a different theory tomorrow. So that's why the 2-year fixes are priced in that manner, because they are expecting maybe rates to go up further.
Yeah.
So they don't want to underprice it, if you will.
Yeah, and then obviously after that, they're potentially thinking that rates may start to come down, which is why they potentially want people to fix it on a longer scheme, to lock them in on a relatively higher rate for the next 5 years, where rates could peak next year and then start to come back down. So the scheme that you go for, really, really difficult. If you're going to get a better rate on a 5-year. If you find a 5-year fix for 4.5% and you think the payments are affordable and you're going to be in the home for the next 5 years, there's an argument to be made that actually that's not a bad decision. But you have to accept that if you fix in for 4.5% now, there's a possibility that rates could peak next year and could start to drop in the next 2, 3, 4 years and could potentially reach a point where they're below 4.5%. But there's just so many moving parts that we can't guess. You need to make a decision for you, which is why we always put a disclaimer in there that what we're telling you now, don't take that as advice. It really does depend on your personal circumstances. We're just giving you a general overview and some theories of how people think that the market might evolve over the coming months and years. As always, if you want to run your circumstances past us, you can give us a call or drop a message, leave it in the comments. Bada bing, bada bing.
any of those.
It's been a while since we filmed, so I can't remember what you've got to do. How do they can just call us, can't they?
They can call us. There'll be an email in the description.
And can they click the link to subscribe?
There's
or we're
no
not there
clickable
yet?
banner. No, we need another
10,000
subscribers.
Okay, we're getting there.
I don't
It's
know what
growing.
we need.
We're going to make some more videos specifically about if your remortgage is coming up now, which is not the most fortunate timing, or if you're potentially looking to buy a house and is it the right time with rates as high as they are. So we're going to make some more videos which might be more specific to you, but this was just a general overview. We'll see you next time, and thanks for watching.